All right, welcome to The Explainer. Today, we are diving deep into a really fascinating property in Kuala Lumpur that just seems to break all the rules. We're talking about the Dorchester Sri Hartamas. So the big question is this place a hidden gem for a smart investor, or is it just a financial trap waiting to spring?
Okay, so let's get right into the heart of the matter, this paradox. On one hand, you've got a property whose value is actually dropping year over year. Yikes. But on the other hand, it's churning out a rental return that's practically double the market average. I mean, how is that even possible? It sounds completely backwards, right? Well, let's break it down.
So, to really wrap our heads around this puzzle, we've got to start with Dorchester's biggest, and I mean biggest, strength. Its location. We're talking prime Sri Hartamas. And look, this isn't just about having a fancy address. It's about a whole different way of life.
You see, Dorchester's real magic trick is how it's seamlessly connected to the Plaza Damas commercial center. This creates what you could call an urban village. It's this self-contained little world where pretty much everything you could possibly need is, and I'm not exaggerating here, just an elevator ride away. And this is what we mean by the lift-to-latte advantage. Just think about it. You could forget about battling KL traffic for your daily grind. Need groceries? Just pop down to Mercado. Your morning coffee fix? Starbucks is right there. Doctor's appointment? Bank run? Grabbing dinner? It's all under one roof. That direct, indoor link to the Hartamas Shopping Centre, that's an absolute game changer, especially when those tropical downpours hit.
All right, let's switch gears and talk money. We're going to crunch the numbers and see how this property actually performs. And trust me, this is where the story gets really, really interesting, especially if you're looking at this with an investor's eye.
Now, look at this number, negative 1.89%. For most property investors, seeing this is like a giant flashing red light. It would send them running for the hills, and honestly, you can't blame them. It means that, on average, the sale price of these units has actually been going down. For anyone banking on capital gains, that's a nightmare.
But then you see this, a potential gross rental yield of up to 7.2%. Let me put that in perspective for you. In the Klang Valley, you're lucky to get 3, maybe 4%. So 7.2? That is absolutely massive. This thing isn't just a property, it's a cash flow machine.
And this table here, it just lays that whole trade-off bare. You can see the entry price for a studio is pretty low, right? And that's exactly what fuels those incredible rental yields. So what's the deal here? Well, you're basically giving up on the idea that the property's value will shoot up over time. In exchange, you get this powerful, reliable stream of cash in your pocket, month after month. You know, in today's economy, maybe that predictable income is a smarter bet than just hoping for future growth. It's a really important question to ask yourself.
Okay, so we've talked numbers, but what's it actually like to live there? Because the spreadsheet tells one story, but the day-to-day reality, that's a whole different ballgame. And believe me, it comes with its own set of compromises.
This slide just nails that central conflict, doesn't it? On the pro side, you've got that convenience we talked about. It's unbeatable. And it's a surprisingly affordable way to get a foothold in a prime neighborhood. But then there's the con side. You're dealing with a building that's over 20 years old, the weekend parking situation is, let's just say, a nightmare, and you've got noise and traffic to contend with, especially during rush hour. It's a real trade-off. And look, these aren't just hypotheticals. These are direct quotes from resident reviews. People are talking about frequent water supply disruptions and lifts that are prone to breakdowns. When you're looking at an older building, these kinds of maintenance headaches can become a very real part of your daily life. It's something you have to be prepared for. And it's not just the maintenance. On top of all that, you've got these hidden costs. See, Dorchester is built on commercial titled land. What does that mean for you? Well, it means you're going to pay more for things like electricity and local council taxes. And here's a big one for investors. The management can legally ban short-term rentals, like Airbnb, whenever they want. Poof, your entire income strategy could vanish overnight. So how does Dorchester stack up against its neighbors? Well, you've got Windsor Tower, which is also a bit older, but goes for families with bigger units. Then there's the brand new Dorset Residences, which is all about modern luxury. Looking at this, it becomes crystal clear what Dorchester is. It's carved out its own little niche as the go-to budget-friendly, high-yield option for singles or couples who care more about location and cash flow than anything else. So after weighing all the evidence, the good, the bad, and yeah, the kind of ugly, we can finally ask, who is this property really for? Well, it turns out the answer is pretty clear, and it really comes down to two very different types of people.
First, let's talk to the investor. For you, this is a pure yield play, period.
You are not buying this to flip it for a profit in a few years, you are buying it to collect that sweet, sweet rent. So the playbook is simple. You have to buy it at the right price, ideally under $250K. You absolutely want to hunt for a unit that comes with its own parking spot. That's gold. And be ready to spend a little bit, maybe $20K, to give it a cosmetic facelift. Oh, and base your calculations on a stable, long-term tenant, not a risky Airbnb gamble.
Okay, now what if you're thinking of actually living there? It could be perfect for you, especially if you have that busy, lock-up-and-go kind of lifestyle, where convenience trumps everything. But, and this is a big but, you have got to do your homework. Seriously, go there and test the water pressure yourself. Check for leaks. Visit on a Saturday afternoon to experience that parking chaos firsthand. You need to know exactly what you're getting into before you even think about signing on the dotted line.
Which brings us all the way back to our original question. Is the Dorchester an aging relic that's past its prime? Or is it secretly the smartest cash flow investment in all of Sri Hartamas? You know, in the end, the answer really depends on what you're looking for. It's all in the eye of the beholder. For someone chasing capital gains, yeah, it's an old building. But for an investor who's laser-focused on cash flow and does their due diligence, it might just be the most brilliant, resilient investment in the entire area. It all comes down to a simple choice. What do you value more? Potential growth on paper or cold, hard cash in your pocket?